Well, hello and welcome, gentlemen. Thank you so much for joining us today for the ET Soonicorns Summit. It's great to have all of you, really disrupting the neo-banking space and becoming the new faces of neo-banking and how banking services are delivered in India and how financial services will be delivered in the future. I just want to get started. We know all the numbers, right? We know 150 billion by 2025 in terms of valuation. Indian fintechs are very crucial. Financial services is crucial for India to reach the 5 trillion economy. Let me start by asking all of you, right? We've had the Aadhaar moment, we've had the UPI moment. Where do you see the next wave of innovation coming in from? And where do you see rather the entire space evolving? Is there any other public infrastructures that you're really excited about? Let me start with you, maybe Nilay, on this question, and move on to you, Reeju and Jiten, and the Apoorv and and Yogesh, obviously.
Thank you, Tarush, for having us. Now, it's interesting times for all of us, and what you rightly mentioned. I mean, for once, we are not chasing valuation. For the last 3 years, we have been profitable. We've been constantly building our team. So we've adopted an interesting concept where we just brought in a CEO from a bank. So the reason for doing so is, I'm very much aligned in the entire regulatory perspective that fintechs kind of need some sort of handholding by the regulators. So we are kind of going in the right direction, so to speak, because a lot of innovations can be done and a lot of disruptions can be done. So, some of the regulatory frameworks that I'm bullish about is account aggregation, because easypay addresses a huge chunk. I mean, MSMEs we target, and 95% of MSMEs are actually micro. And what we want to kind of help them is empower them to go to the next level. And because they contribute almost 30-35% of India's GDP. So if we are going to go to the 5 trillion GDP mark, there'll be huge waves coming in of innovations in the space that we are in. So account aggregation, ONDC, a very nice initiative by SIDBI that they want to create a CIBIL kind of rating for the micro and small entities. So this will in return kind of help them to borrow much more smartly, digitally and easily. In return, it would kind of help all our goal to reach that 5 trillion and probably $10 trillion economy within our lifetime.
So thanks for that. Moving on to you, Reeju. I mean, how do you see this space? I mean, it's been a decade of fintech and where we've come. How do you see now the next wave of innovation coming in?
Yeah, so I think I'll talk about cross-border payments maybe. I think there's a lot happening there that we are seeing, and there are two themes maybe. One is making payments easier for Indian exporters, right? How they can sell globally. How do you digitize the process, make it cheap, fast? So that is one theme, and then also sending money out of India, and there how can you enable help Indians invest in productive assets, right? And not just, for expenses. So those are a few of the things that probably are happening. And there is also from a regulatory tailwind perspective, You have the gift city that is coming up, right? And then that has the potential to become, something like Dubai or Hong Kong, right? Based out of India. So which holds enormous potential, but again, very early days, and we'll see where that goes. And in addition to that, we have the regulator, RBI, having an entire sandbox about cross-border payments. So that does tell you that, the regulator is serious about, cross-border payments going forward. Yeah.
So Jiten, you've seen wave 1 and wave 2. We're at wave 2. Do you see a wave 3, and what will that be?
I've seen actually before wave 1 as well. So during early part of my career, I worked with a bank for almost 7 years. And I still remember that the retail banking, whenever we used to discuss among our colleagues, we used to say that what choice customer has. Ultimately, every bank offering is same. So, so the only differentiating factor becomes the interest rate. And I think this phenomena kind of existed before all this whole neo-banking wave, which we're seeing right now, not just India, but across the world. So, so I personally feel that the most boring part of banking is becoming the most exciting part of banking. And I think that trend we'll see more. We're already seeing where the banks who have been there for 2 decades, not done anything new on the retail banking side, suddenly saying that, oh, this is the area where they're going to invest the most. This is the area where they're going to improve the most. All large banks are working on that. So definitely, be it fintech or be it the banks, there will be a marked improvement in the way consumers experience banking. And like if I have to make like a very trivial prediction, and we have seen this in the mobile phone generation where like the mobile number portability happened, and nobody could believe it would happen. I feel with the AI infrastructure being ready and this whole the banking experience focus from most of the banks and the regulators, I will the bank account portability will also happen. Where a consumer could simply port his account without getting disrupted of beneficiaries or the transaction history and all of that. I think that would further put pressure on banks to up their service or up their game. So that's how I see the third wave coming in.
So bank account portability, that's a very interesting point, Jiten. I think you're really, really bullish upon it. Let me come to you, Apoorv. You are a young age startup, definitely trying to disrupt a newer space altogether and really getting into a great PMF from what I hear in the industry. So what is your take now? Where do you see the next wave 3 of innovation in Indian?
Sure. First, Tarush, thank you so much for giving me the time. Now, we are already aware of the great success stories in India around UPI and how you already talked about it, and also the upcoming platforms. Although a lot of them are still being made live. For example, the account aggregator platform. We understand the potential and the power of it. One thing that I want to highlight is around how these financial services have been distributed over a period of time. I come from a lending background. I have seen just how dominating the big tech has been in terms of how these products are being distributed. So pretty much all the distribution channels are currently controlled by the monoliths that we have in the industry, containing subsidiaries, which basically all of the internet is just these companies. And ultimately, that's how you also access financial products. That we don't have a better channel of distribution for financial products right now. The standard B2C marketing channel exists for pretty much all the products, whether it's selling soap or selling a financial product, which probably has a lot more impact on someone's personal life. How I see is that with the new platforms which are coming up, and this is very relevant to what we are doing at Refyne, is how the distribution of these financial products will take place. Previously, it was around a pull effect where a customer goes on to Google, searches for a particular product, there are advertisements there, and that's how. So it's being pulled. Whereas we want it to go into a more awareness-driven and education-driven approach, where the customers are educated first on what is it that they should be doing and have a very holistic plan around managing their personal finances. That was the vision around Refyne when we started it, and it continues to be so. But distribution of these financial services is one place that is going to dramatically change. The standard marketplace solutions that are available for absolutely every other digital product, I feel like we can do much better than that. And also, there has to be an element of education around distribution of these products. That's how we are seeing things at Refyne, and something new. Otherwise, I think all the other success stories that you guys are already talking about. So I concur with those as well.
Sure. Moving to you, Yogesh, you bring in the tech in the fin. So let's hear from you as to where do you see, with so many startups working on your platform, the next big disruptions coming in, at least for now.
Sure. Thanks, Tarush, for having us. Actually, what I feel, and rightly picked up by Nilay as well, right? If you look at this innovation started somewhere in 2010 beyond, which is the first wave, which Jiten also spoke about, wherein the digital challenges actually came in, digitized the industry with payments on mobile started, right? I think the next wave will come from companies which are existing but have not really used tech. For example, motor industry or e-commerce retail. Nilay spoke about ONDC. Telcos are even prominent tech players who have not really used, prominent consumer technology players who have not used technology as the first thing. And that will come up, and this is again targeted towards the larger Indian middle class as well as the Bharat, which is actually existing beyond tier 3 and tier 4 cities. And lastly, on the MSMEs, with more and more visibility and transparency coming in, I'm sure with Web3 and the blockchain technologies which we spoke about, I think that is where more innovations will come, and the next wave will come wherein you will have clarity on where exactly the funds are flowing from, and the entire transactions will really come up with transparency, I believe. And tech is definitely a part, and AWS has been part of the journey right through. So yeah.
Absolutely. I think that's like a mirage range of where we see the entire landscape can be. And I think we're all kind of crystal gazers in this world as well. With the entrepreneurs here kind of taking in the bigger bets rather. But I also have to ask you this, right? Like, we are at a very interesting juncture of Indian Fintech, right? There has been a great amount of, I would say, zest from the regulator at present to kind of look at compliances, look at regulating the segment further, while certain fintechs are saying that, definitely that's bringing in much more clarity as to now the grays are removing from the industry. But there are also business models that, have been built over time, on some of the things which fintechs thought were the right way to kind of go. So I want to start with you, Reeju, by starting to ask you that, because you've been more often than not in touch with the regulator for either your licenses or the recent sandbox, announcement that you guys made and the regulator made. How are you seeing this entire, tango that's going on between business models and, compliance and regulation and all of that? Because that's kind of squeezing some of the fintechs not in a great position, right? So where do you see the overall, dust settling in, and how are you interpreting it?
Yeah. So I think like the regulator has kind of focused on customer protection, and at the same time, they don't want to disrupt the existing business processes as long as they are, like above board or they're aligned in the right intentions, right? So yeah, so I mean that has, I think, been the overall trend, and they also don't want to curtail innovation, right? Like RBI just wants to be seen or wants to kind of further innovation. So if you look at just all the sandbox projects that have come up, I mean, we were part of the cross-border sandbox, and right after that we had the sandbox on credit, right? So and that has themes like co-lending and so on, right? So which are very new concepts. So the RBI is definitely very pro-regulation, the pro-innovation rather. And this, I think, as you said, the guidelines, they define the right way to do it, right? And they also highlight the don'ts, right? So I think as far as we see, I think it's just consumer protection, not disrupting the existing business practices and being pro-innovation at the same time, right? So that's the sense we get.
Sure. I want to move to you, Jiten, on this particular topic, right? Because you've seen a wide array of this, right? You've seen this over the years and have interacted with the regulator also over the years, right? Across two different businesses, right? So I want to kind of understand this as to, where is this kind of, putting the Indian fintechs at present, right? Because it's coming one after the other. And the RBI is very clear that, we want to kind of regulate every aspect of financial services. So how are you looking at this particular, I would say, movement rather from the RBI towards compliance?
Sure. So I think if you look at RBI specifically, their approach generally has been for any innovation, let it reach certain scale, and then they try to regulate it. And I think this is the approach which I've seen in last 10 years. And so I think the first step which they did was related to the whole payment aggregation companies, where they said that, okay, this sector has grown to a level where it needs to be regulated so that they can remove all risk associated with the sector. So they started licensing the sector way back in 2020, 21. And I think similarly it's happening now, where they kind of let innovation happen on the digital lending side, and then see that what to regulate. And if you look at the essence of regulation which they're coming out very clearly is that they want transparency. They want clear communication, the clear explanation to the customers about the lending practices. They don't want customers to be over leveraged without customer knowing that they are getting over leveraged. So effectively, when they realize that a lot of such practices are happening, and it's happening at a scale, it needs to be curbed. I think this is where, while we see as one after another, but I see him like it. I think it was a matter of time. It was supposed to happen. It's just that the matter of time happened like the back-to-back regulations. So I think we see this as a knee-jerk reaction, but I don't see anything wrong there, what they did. That being said, like being on the fintech side, the way I see is that, yes, they're also taking the hammer approach, which is like, let me control everything at once. And I think that is that definitely has certain side effects to the sector, but maybe the dust will settle soon, because the good part is that they're also listening now. They're also inviting for discussions, for suggestions, for improvement, what they can change, what can they make better in terms of guidelines. So it's a temporary moment in my view. I don't think it's going to be a permanent phenomena this way. And of course, they want to be vigilant about areas where the risk could go at a scale where it's difficult to contain. So I think that's the overall messaging I see from the regulatory side.
I want to just lap on another question for you on that one. Is that, is the era of licensing here, right, for Indian fintechs, right? Because I mean, there was not the opportunity earlier to be a licensed entity, right? But now I think somewhere this is also pushing the industry into a black and white, where it's clear that a licensed fintech versus a non-licensed fintech, how these two will be approached in the market. So do you think the era of that is coming now?
So I think not just India, but everywhere this is happening in terms of the fintech suddenly grow at a scale, then it becomes difficult to control. So every regulator, be it the Singapore, Indonesia, Thailand, UK, they have started into this regime where either they have a light touch regime where they're saying you come and register with us, or second is that we will give you some license to operate in the country, so that the unnoticed activities don't happen. And I think that's what even RBI is moving towards, where they're saying that we are not opposed to innovation, but we want to know who is doing what. And so that if anything happens at a scale, it just does not go out of control when the risk increases. I think so. So yes, it makes life tougher for a early stage startup, I would say, it definitely makes life tougher, because the early stage startups are by nature not tuned to be regulated, not tuned to be like heavy compliant in their processes, in their compliances. So yeah, it deters the young companies, but yeah, from an ecosystem standpoint, I think it's needed. Now, can there be a middle path? Maybe, like a scale based path, but it can't be totally unregulated. I think that is very, very clear.
Sure. Well, I think Jitin has opened the floor for you, Apoorv, actually saying for early stage startups. So I actually I wanted to ask you the same question, saying that, at the early stage level, right, where you're seeing compliances which are hitting growth and late stage startups now, right?
Yeah.
How are you looking at those business models? Because ideas are a galore, right, at an early stage startup. But where do you see, okay, this is compliant, this is not compliant? How do you look at the entire industry for this and your growth, rather?
Sure. What helped me a little bit was coming from the lending industry, where we did see a bit of regulation tightening happening starting around 2017-18. After that, the entire NBFCs and how they operate, and even regulations around NBFCs started to come in. So it was pretty clear that RBI was headed in this direction, and RBI has always given very clear indications that we are headed in this direction. I remember at a point where they had very clear norms around who can access these credit reports, and for a very good reason. An individual's credit report should not be floating out there with absolutely everyone to see. Those are very, very specific information details which are to be accessed for very specific purpose. And from there on, I think there have been a slew of new regulations, but RBI has been clear in what they are trying to achieve here. RBI does not want systemic risks to the ecosystem. If you recall, we had an ILFS event, Yes Bank event. Those were basically bumps that we hit on the road, but we never had a full-on meltdown. We never had our 2008 moment. That is because there were constraints in place such that even after hitting these roadblocks, the system is designed to correct, and there are enough checks and controls and balances in place. I think with fintech becoming big enough, a lot of the RBI will start seeing it as a potential systemic risk, and therefore the regulations will come accordingly. And that has served us well till date. We haven't had our 2008 moment. Hopefully, we'll never have it. But regulations will absolutely be required for that. And like Jiten mentioned, RBI has shown some inclination towards a tiered approach. I think if that comes to the startup ecosystem, that will also be very useful. For the NBFCs, you have systematically important, non-systematically important. So there are already precedents where they have gone with a tiered approach. How we see is that particularly from a Refyne perspective, from day one, we did spend a little bit of extra effort on the compliance side. We did spend that extra mile to make sure that we took a relatively more conservative approach rather than it did curb a lot of interesting things that we could be doing on day one. Absolutely open about that. But we have to see from a future scalability perspective. We believe that it's better to create a product that scales and continues to serve the customers over a period of time, rather than coming up with something which is a very, very radical and from a regulatory perspective. Technology-based innovations, I think everyone appreciates. Compliance-based innovation, where you are circumventing certain measures, we have seen that RBI is not very happy with things like that. So we have made sure that we take a relatively conservative approach on the compliance side. And although it does add overhead, I think it's more around awareness and having clarity of it. So if you have a reasonable amount of clarity available, even young stage startups can try to follow them from day one. Yes, as in when you scale, you bring in all the right individuals, the right entities to help you build that compliance infrastructure. But it's definitely possible with more and more clarity coming in, and it become common practice and common norm. It will gradually become easier for the female startups as well.
So moving to you, Yogesh, know that I was supposed to ask you this later, but I'm just bumping this up, right? Like now compliance is coming in. How is your technology platform also kind of, being, where do you see yourself as a sweet spot to kind of be, right? Because there's all this, whether this is compliant, not compliant, whether this business is compliant, which is linking onto you. So how are you looking at, evolving your tech stack for this?
Sure. So if you look at especially the way the India stack has come out, it's more like they're looking at a presence-less, paperless, cashless, and consent-aware kind of interaction with the end customers. And I believe with the AWS services, which are actually the deepest and broadest set of services which are focused on with security as day zero, it's the best platform right now, which is really poised for it. There are 4 to 5 reasons which we feel. One is the most important is we have one-click regulation and compliance right there for the customer on click, right? The AWS Cloud Compliance enables the customers to really understand the robust controls which are in place. All the reports are, all the SOX and HIPAA compliance, the ISO compliance reports are ready on a click of a button. While we continue to build the infrastructure and network for the most security conscious organizations worldwide, and the same configuration is actually being put for all even the early stage or mid stage startups, right? Second is the seamless and safe transaction backups which we drive. We have very strong disaster recovery policies which are ensuring that the backups are highly secure and fault tolerant, while giving you, while ensuring that your savings on that cost, it's not actually burdening the early stage startups. The third thing is performance and scaling, right? While we are catering to the Indian diaspora, what happens is the fintechs are regularly seeing spikes and bursts in their customer traffic. AWS is providing the resiliency and reliability by way of the infrastructure, the way it automatically scales out and scales in, right? Which is ensuring that the applications are always available while they are also reducing costs. The next is high availability, which is with the mobile phones really getting democratized. Everybody wants banking to be available 24/7 by 365, while it should be secure, right? With our region and the easy concept, we have an infrastructure which gives you high availability and a service uptime of up to 99.99% with if you have the right architecture in place. And lastly, we are a company which is supporting builders culture, right? We give a complete ready-to-use tool chain to the developers so that every time the regulations are changing or new norms are coming in, they are actually ready to put this in the chain really faster. For example, if I have to speak about the DevOps tool chain, for example, we have a product called AWS Code Commit, now which is like a Git repository of your code base, and which is followed by a code pipeline, which helps you continuously deliver the newer build and test it on the fly. And lastly, we have a product called Code Deploy, which is a part of this DevOps tool chain, which automates the code deployment, right? So this really makes the startups agile and ready for the regulation changes which are happening, while we are still ensuring that the security for the cloud is taken care.
Sure. I want to move to you, Nilay, quickly. I think you are rather in an industry which has compliances and newer innovations also going on, especially with ONDC and all of that also coming in, right? So compliance, what's your take on it? What's the hot word for your segment?
So probably I have one word for compliance. It's hygiene. In order for any fintech to grow, it's a simple hygiene one has to follow. It can be argued whether what sort of compliances are put in practice, but the way again I see where India has to go and grow, there's a huge population, and especially businesses are underbanked. So if there are not certain protocols set by the regulator, it can just go haywire. So we just strongly believe in being compliant. At the same time, if there's there are a lot of sandboxes out there by the regulator. I think that's more towards R&D and more suggestions from fintechs like us to kind of help them take the right decision in the right direction.
Sure. I'll just move into individual questions now, I think, looking at the time quickly. Jiten, I'm going to kind of start with you, just the learnings, right? What you built rather with Citrus Pay earlier was very different, right? To now what you're doing, right, is I would say an evolved, much more hyper version of what you were doing at that point of time. Maybe at that point of time that looked hyper and the possibilities looked hyper at that point of time. So I want to understand, like, what's some of the learnings that you've carried, right, onto startup number 2? Like, what is some of the things that you've kind of imbibed also to say that, okay, now this is what we're going to do? And I think the one that I can see from you is that there is not a lot of innovation actually happening in financial services. There's just a lot of innovation happening in delivery rather. But go on, I'll let you take the stage on that.
So I will talk about the similarities as well. My office has remained same, by the way. The office I'm sitting, the same office since 2013. I think if you look at it, the changes which has happened. So since 2000, till 2014, there was no word fintech which existed, by the way. So I learned to say fintech. So that's a big change which has happened from a financial services play to a fintech play. But I think the key learnings personally has been around how to build a more resilient organization. And I'll give a very specific thing here. So what tended to happen earlier, like, and maybe it was my personal maturity as well. What tended to happen earlier was like whenever there was any crisis situation, you tend to react fast. You tend to react fast because you feel that is the only way to come out of crisis. But with sort of age passing and the era passing, I think the biggest learning is any crisis you can weather if you take a pause, think, and act. And I think that's like a big change personally, which I have seen. Second is, I think on the regulation side as well. Earlier, the feeling was always that do arbitrage play, don't hide from the regulator as far as possible, so that they don't come after you and all of that. But I think the world has changed in terms of where, especially the India or anywhere else also, the progressive country, where the regulator wants to know what you're doing. Regulator is keen to understand more, and then shape the regulations around that. And so if you do the same thing, what happened in the first way, which is like hide as much as possible from the regulatory lens, I think that's a disaster now. So you have to be more visible. You have to be more going to them, explaining your business, telling what you're doing. And we have done that. We have done quite a few times. And I think that has given more confidence to the regulator that we're not doing anything shady, or we're not doing anything under disguise of something else. So I think that's another learning. And the third is the biggest learning, that if you really want to build a long-term business, create a relationship with your consumer. See, the transaction, there's a difference in relationship. So like payments and lending typically are very, very transactional relationship. So where you make a transaction, either a payment or a lending, and after that, consumer, when they make transaction next time, they decide what is optimal for them. But in the banking or financial services for that matter, if you build a relationship, you don't have to worry about whether this consumer will give you revenue next time or not, or whether this consumer will give you LTV next time or not. And to build a relationship, you need to service well. So I think there's a big difference I'm seeing. Like personally, and my team has been focusing a lot on servicing the customer well. And I think that has given us results. So like our organic acquisition is like 50%. And I've never seen in my last 2 stints where our organic acquisition touched that much. Our organic acquisition in my past 2 stints also was never about 10%. So I think, yes, it's an additional cost of setting up the process, team, doing things right every day, every hour, every minute. But I think that gives you long-term results. So I think these are few learnings which I can share.
So I just want to move to you, Reeju, rather, right? You've been rather a company which has been moving towards more and more regulated. You want to be regulated further. So I want to understand, India is a stomping ground for international innovation. Also, we're seeing UPI, RuPay. You've made some waves in terms of setting up international businesses, wanting to solve for international payments, cross-border. So where do you see in your analysis that, you can take this innovation to the global front, right? And where do you see are the gaps in the global economy where you can see Indian fintechs can kind of fill that in?
Yeah. So I think there are a couple of items, right? So one is, definitely cross-border payments, right? That I alluded to earlier, right? And how can you make, right? And as a result, what we're trying to head to is banking outside the box of a bank, right? And a great example is UPI in India, right? Where you have payments from one bank to another, which was the domain of banks so far, and that's happening on a completely unrelated third-party app, like a Google Pay or WhatsApp. So just extending from there, like how can we move other banking services, right? Like loans, like a card, right? So how can we enable, fintechs to become the distributor of financial services, banking services more efficiently, faster, right? How can we create a level playing ground, right? So that any company can become a fintech company, more easily. Right. So, and then within that, I think defining the right standards, right, and structures for this interaction between the bank and the fintech is very important. Like this is very important in India, I would say. I think it's slightly, I would say, advanced here outside India in some countries. Like let's say Europe, right? Right. But I think how do you define these structures, for API banking, right? Is kind of very important, right? Keeping security and privacy, data privacy in mind. And within India, I think a great model to again look at is the BC model. I think we spawned a lot of successful. We can argue, I think that was a fairly successful model, and we had a lot of BC's banking correspondents, right? That offered banking services like account opening in tier 2, tier 3, very small towns, right? I mean, you have companies like Fino, for instance, right, which have IPO'd, right? So that we can argue is a successful model, and all of that was very physical, right? Can you do a digital BC, right? So that I would say, is the precursor to what when we are saying banking as a service and all, right? So can you enable a digital BC and maybe give them greater access, right? Like can they help deliver loans, cards, and so on, and other services, even like insurance, investments, and so on. So I think that is, and these points are talked about, right? Like you can read about these in like something like the Wattle Committee report, right? That came out, I think, around five years back, right? So those are alluded to, and I think the policymakers have noticed that. It's just about getting that into action, right? Defining regulations around that. Right. So, and that again, and then I think that can be again taken out to the other geographies, right? Like once we have a framework for API banking as a service in India, we can take that to emerging countries, right? Southeast Asia and all. And I think Indian fintechs can lead the way there, right? Like, so yeah, that's the option, that's the potential, right? We can have Indian technology companies creating new banks, in Southeast Asia, for instance, right? So that's the sense.
Sure. I think I've just got a ping from the team. It's like we have another 5-10 minutes to just go. So I'll quickly kind of move on to you, Apoorv, and then ask you also, right, that this is a new model altogether, right, that you're kind of looking at. It is payday loans, but you're kind of quoting it as something different, etc. also in the market, or it's coming across as something which is interesting, right, of giving salaries early. I think Jupiter is also doing something similar. When you're looking at doing this in particular, right, I again want to ask you this, how do you sit in with the compliance? How do you sit in with, the customer being at the right side and not misusing the platform, or like, making sure that all checks and balances are done, right? I know that you might be running on the employer network, but still, I mean, there could be a lot that could happen potentially. So where do you kind of sit in? And have you kind of also spoken to the regulators saying that, this is also another model that you guys are, coming in with the industry with?
Yeah. So I think our current existing model is a retrofit between what the regulator already allows in a very, very standard capacity and trying to bridge it with technology, with the entire employer-based platform that we have built. Very quickly on where we started. Again, coming from lending industry, Jiten also mentioned that first thing we noticed people did after getting the loan was delete the app itself. And that's not a relationship we wanted to have with the customer. And that's where a lot of ideas for the Refyne came in. The vision has been to help people manage and improve their personal finances. So it's more around education. It just so happened, earned wage access is an amazing place to start. So our goal from day one is, can we get people more transparency into their earnings, help them manage and manage their personal finances and budget better. And mid-month, if they have any needs, which given the entire Indian demographic and the ecosystem that we have, that's a very, very large problem. We did a massive survey with Ernst & Young, which is the largest in Asia, which clearly showed just how critical that need is. Now, currently, there are no good ways for employees to solve their mid-month problems. The only way is to reach out to these exploitative payday lenders, and that has brought a very, very negative connotation for the term payday lending. Our goal has been very different. What we want is to give people more transparency, and if they want to serve their mid-month financial liquidity problems, they can only access what they have earned. There's a key difference. A typical lender, and in the lending ecosystem that became the norm, was they are in the book building business where they're trying to give out as much money as they can, and also helps the unit economics. Our goal has been to help people solve the crisis and use only the money that they have earned. The second is only access what they need, rather than if you go to a lender, they will say, oh, we don't give out 20,000 rupees. Those we will only give you 50,000. No one says no to larger amounts, but ultimately they get caught into the debt trap, and which has been the antithesis of what we have been trying to do here. And we have been phenomenally successful, thanks to the employer ecosystem, which has accepted this new innovative solution. And at this point, we are working with some of the largest enterprises in India. One initial challenge we faced early on was around education. People didn't know that a product like this could exist, which could help their employees. And now with us achieving scale and showing the product market fit, more and more larger enterprises are coming on board as well. So it's a virtuous cycle where the greater scale and the greater product market fit we are showing. Of course, the investors are interested, but also it's the larger ecosystem which is growing. We have seen incredible engagement and adoption from the employee base themselves, where we have a massive retention rate and an amazing score from the customers themselves. One is that for one, we have to live up to very, very high standards. This is a perk being offered by the employer to their employees. So there's a very critical employer relationship which is coming in between, and we have to respect that, be cognizant of that, and make sure all of our services align to those quality of services QS that we need to provide to the employer and the effective employee that we are ending up serving. From a regulatory perspective, again, we have tried to be conservative on the model and try to retrofit it on the existing rails that we have. We work with regulated entities through which these credit lines are created, where people are being financed through. So again, very, very standard norms that RBI has proposed. We come in with our employer network, the digital ecosystem that we have built with the employer, the integrations with the employer. One very critical part for our success has been that we make it almost a no effort solution for the employer, where it's very easy for them to come on board. We seamlessly integrate into their existing technical tech platforms, whether it's the HRMS, whether it's the ERPs, and it can be immediately rolled out to their entire employee base. So that's been a very, very critical aspect. The second has been around education, where we have financial coaching in our system, where every customer that comes to our platform, we make sure that we are giving them financial coaching. We are telling them exactly how to manage their personal finances, not selling them. And that's where my initial point of that I feel like we are going into this new era where it's going to be less of selling and bombarding people with products, and more about educating them that why should they have a particular kind of product, a financial solution? Why should they get the insurance? Why should they have a particular medical coverage? It's going to be more and more around education, and that's what we want to be a part of. We want to help people manage their entire personal finances, and we feel like the best way to do that is through the employer and the approach that we have taken.
Yeah, sure. And when I come across your company, I heard all these new terms that you said, earn wage access and all of that. And now there's antithesis as a word coming in. So definitely, like, these are high on SEO words that which are there in terms of just rebellion in the financial services ecosystem. But coming to you, Nilay, rather you're working on a systematically important sector for I think for the country. But it's not an easy sector, right? It's a sector which is fraught with a lot of dynamicity in terms of how MSMEs work. But there's a lot of innovation that's coming in, right? And there could be those tailwinds as well. So help me understand this. With so much happening around, how are you kind of really working on to kind of make things more personalized for, let's say, a certain grade of MSMEs, right? Because I think every segment in an MSME is so different across. So how are you kind of personalizing it? How are you looking at the challenge? Are you say, oh no, we're going to focus on this 5 segments? Products, there's so many in the market today, so many competitors. How are you looking at the perspective? And then possibly after that, I'll just quickly run through the room with the one last question on profitability. I know everyone's smiling on that, but over to you, Nilay.
Yeah. So EasyPay has spent 8 years understanding this particular segment. We are 8-year-old startup, and what we've done is, we've kind of segmented it in our own way, where and we've mainly focused on small trader rather than a manufacturer, which kind of helps us narrow down the kind of target market that we have. And then the current the product that we have and which we are building to end-to-end financial solution for this MSMEs was probably last 1 year was very easy for us, because the whole crux of so many years of experience. And then I personally take almost 1,000 calls a day, 1,000 calls a month, just to hear on what a customer service team is talking to these MSMEs. And Jiten earlier pointed out a very important point, that one has to understand their customers, and once you do, it becomes so easy. So what we did understand, and a simple question that I ask all my friends, that when was the last time you visited a bank? They have to scratch their head and remember that, okay, it was a few months ago. And with this simple problem statement, I go to my team and say, I don't want our customers to visit banks. It's in their palms. They should be operating it from their palms, and that's how we are doing it. Secondly, in the whole thesis, I believe that banks will go invisible. So they'll still remain, but that they'll be in back end. There are new age companies which will kind of understand, earn the trust of the consumer, and kind of help them solve that niche problem so nicely that they wouldn't need a bank to go to physically.
Sure. Final question. We have 5 minutes 3 minutes rather on the clock. So I'm timing all of you. So it's like 1, 2, quickly on this. Obviously, we've seen some slew of startups kind of go, public as well. And I know that everybody talks about not just a journey of creating good value for investors, but also kind of creating a legacy onto the public markets, right? I want to start by asking you, Reeju, right? I mean, so many things happening. There is evolving regulations coming in, there is new innovation, there is competition, all of that clubbed in. So, where does profitability kind of fit in? I want to start with you because I know that your answer would be like, hey, we are profitable, but how do you sustain the sustainability of it rather?
Yeah, I think for us, we have been lucky enough, I would say, to be profitable for the last 5 years or so, right, since inception. And I think, operational efficiency, trying to automate things, being very frugal, right? I think, we were a 5-member team for the first 2 years, of our existence. And so I think, that was, I think that set up the base, I would say. right? Just making sure you have positive unit economics, right? And just keep your head down and build, build gradually, I would say, right? So that's what worked for us. In today's, like in the context where we're a bit larger as an entity, I think the regulations are there, but I think overall the business model is net profitable, right? Like margins come under, I would agree that margins are under a compression, right? Even if you like, let's say, try to onboard an enterprise customer, it's at a lower margin, right? So I think there you need to find higher margin opportunities, like find new opportunities. That is where our interest in cross-border comes in.
Sure.
Right? And like, we're looking at international markets for the same reasons, looking at other opportunities, right? Like issuing banking as a service for the same reason, right? So just try to offer multiple services to the same customer and try to increase the margin out of that is what we try to do.
So moving to you, Jiten, you've had 2 startups and you're in a consumer-facing startup now more than ever. So how are you kind of doing the growth versus profitability question?
Sure. So in the banking, kind of a startup, even like traditional banks, when it comes to retail banking, it takes time. It takes time to one, build and earn consumer trust, and second, to achieve the unit economics. And first you to create the liabilities base, then you sort of start lending or start offering fee-based products and all of that. So I see a similar journey here. We are like literally we just finished like month 13 of our product launch. So very early days. But the key to success for our business would be how do we keep acquiring new consumers at a low CAC, and if we chase high growth, the CAC becomes higher. You lose the discipline. So the cost of acquisition of the customer, if you're able to keep lower and lower, I think it's a matter of time to start becoming unit economics positive on the consumers. So that's the discipline we follow.
Sure. Apoorv, moving to you. Young age business, how are you looking at the perfect match for you in terms of profitability and growth?
Yeah. So when I and my co-founder Chitra, we were sitting on day one, we were discussing that we wanted to have something that gets unit economics positive very, very quickly, or from day one, ideally. The goal there was that we want to have a system which, as and when you scale, the system is financially incentivized to grow, rather than something which requires you to constantly put in more fuel and basically pushing it through the line. And that's something that we have been successful on. The entire earned wage access model works because we are able to acquire customers at almost no cost. We work with the enterprises. It's a perk offered by the enterprise. So our CAC tends to be very, very low. We are already at a position where a customer that comes onto our platform, we end up becoming almost immediately a unit economic positive with that customer, where every transaction at that point, it becomes a bonus for us. And that's something that we see scaling. Yes, there's always a question of high margin where, yes, you can squeeze someone, get higher margins in the short term. And that's something we saw a problem being in the lending space, where because the customer does not come back to you because of the experience, you have to squeeze them in the first go. Where we try to calculate the real long-term value of a particular customer, and how can we continue to innovate on our products, on our services, and how can we continue give more value to the customer, and therefore we will add more to the positive unit economics. But we are running unit economics positive, and the goal is to just scale the model, educate the entire industry, and that will take us at a very good place all by itself.
Sure. Let me come to Yogesh. I mean, are you seeing, a concerted effort in profitability right in the early stages with the companies that you guys work with, at least? And then I'll come to you, Nilay, on the 8-year question on profitability. So, yeah.
Sure. In fact, Tarush, the overall discussion is really resonating with the Amazon leadership principles, which I was just thinking in the background when Jiten or Reeju were, even Apoorv was talking about it. It's again the same thing, right? You are looking at customer obsession. You are working backwards from solving their problems. You are looking at frugality to actually automate and do more with less, right? I believe that is where we were going to. But the automation, especially if you're talking about, there is a lot of verticalization which is happening into AI/ML. When you said that, innovation is happening at delivery, but I would say innovation is also happening in the banking, wherein, there are very, very vertical focused machine learning use cases happening, like prediction on cash flow protection, prediction on the fraud detection, on credit risk scoring. Right, then there are visual tasks like your claim processing, your insurance processing, your document processing. So even the audios, right? Nilay spoke about the sentiment of a customer, and he does. So the customer calls, of course, there is a audio processing happening on sentiment analysis of these calls, right? The voice-enabled payments are coming in, calls out in the call center optimization is happening, and apart from that, the normal textual tasks, right? Customer service chats and the regular use cases which have been there with the banking. So I believe this actually the technology is enabling these startups to innovate faster and do more with less. And happy to be a part of the journey.
So definitely technology changing the way. Nilay, you finally on the bigger question on profitability, is that a focus with so much that's happening in the industry?
So easypay has a different problem. We were profitable for 3 years. Now, during Diwali, we are launching a new product, and that's where I very clearly see that we'll have to go back to the drawing. We are going back to the drawing board like olden days, and wanting to keep the CAC down. Obviously, what we want to do is acquire new customers, give more services to them, and probably not lose out on the same. So we want more repeat customers, because we are getting into lending business, and lending business in MSME is very tricky. We've just done a few thousand loans as a pilot, great success. But when we scale it up to the full potential, we are anticipating some turbulence. So I see a bit of burn, but yeah, I think you arrested certain factors where there's as a startup you tend to kind of not keep that tight leash on it, and you end up burning more money. So we are just trying to get those levers right, where we don't end up spending more.
Sure. Thank you so much, gentlemen, for actually joining us. That brings us to the end of our conversation. Some interesting insights to people trying to kind of look at problems through multiple directions. And well, I hope that all your products continue to kind of prosper, even at the wave 3. And I think we see a new future for Indian Fintech. But thank you so much, gentlemen. Thank you.
Thank you, Tarush. Thank you, everyone.
Tarush.
Thank you, Tarush.